Have the whales given up on Bitcoin? I've got some really concerning developments that I want to show you in this YouTube video. Again, just more looking at the downside potential for Bitcoin. I remain in my long position. I'm committed to it. I've made over $180,000 on this position. I love it, and I still think Bitcoin's going to be going up. But my job as a trader and an analyst is to make sure that I position myself safely in these markets. By the way, this trade that I made was made on Bybit. You can get up to 30k just trading ammunition. You can make a brand new account if you already have one using my link in the description down below, and you can trade on the very same platform I'm using. Here's the thing, is that, again, and I've said this in the previous videos, if you're subscribed you'll know about this very well now, is that even though I'm in a long position, and even though I still think the market overall has a better chance of rising up, the tides are shifting a little bit, right? The fact that we've just kind of been trading sideways for so long has started to throw up some problems. Now, one of the good things, fear and greed index leveling out a little bit, 61. I mean, at least it's not 64. It's not a big drop, but it's still something. Long and short ratio, we've now got majority longs, both with retail and top traders on Binance, but Bybit does remain majority short. So to me, this is a mixed signal. Nothing really particularly strong that this is showing, but here's something strong that I have seen. This is the whale accumulation heat map, and this is all courtesy of Chain Exposed. I've been using these guys a little bit in these videos, and this might look a little bit weird, but you can roughly see this is, this traces Bitcoin's price, right? So up here 64,000, down here 27,000, 29, up here 69, and then obviously our lows at 17 and where we are right now. Now, what's interesting about this chart is the warmer colors, the more red the colors are, the more this shows us that whales are actually buying and accumulating Bitcoin. But when the color temperature changes to these greens, these blues especially, these colder colors, that shows us that that whales are selling. Okay, so warm colors means whales are buying. Whales are obviously just very big crypto holders. It shows that they're buying, and cold colors shows that they're selling. And what we have right now is kind of in the middle. If we take a closer look at this, where we are right now, see, we had a lot of selling pressure from bears right at the low, which is strange. This is something that I've spoken to you guys about in this specific market as well, in this market cycle, is that whales have gotten a lot of things wrong. Whales, institutions, I don't know if people are like actually paying attention, but usually these guys with the big money are right most of the time. But recently, they've been wrong nearly 100% of the time. And this is a great example of it. The fact that MicroStrategy, Michael Saylor's company, bought Bitcoin at an average entry price of 29k. The fact that the fact that Elon Musk bought Bitcoin in the mid 30ks, and so on. A lot of big, rich guys that usually make the right calls have been fucking it up lately. And here's another example of that. Whales selling deep right at the bottom. I mean, they did the classic crypto noob bullshit that, I hope many of you guys didn't even do, which is that they bought low, that they sold low, and they might be looking to buy high. We're seeing that the color temperature is easing up a little bit. There's some more buying pressure coming in from whales, and then it kind of flatlines, and then a little bit more buying pressure on these lows, and then it kind of flatlines, but we're looking okay, right? It's definitely not clear buying pressure, but it's not an abundance of selling pressure either. Overall, we're missing it. We're missing it. It's okay. I'm fine with it. We're in a nice uptrend. So you know what? If we're showing some kind of neutral signs, I will give it the benefit of the doubt. But it is still a little bit on the low end. And that's concerning because we can't break $30,000. That's the main thing that I need you guys to take away from this video, is key reasons why we can't break $30,000. This is a strong area of resistance right here, and we've been stuck here for a very, very long time. The next chart I'm about to show you gets even crazier with all of this, but before I continue, guys, the 𝐻𝑜𝑟𝑓𝑙𝑦's daily channel is yours for more altcoin analysis content around the clock. As soon as this video is done, I'm going to be posting 2 or 3 rapid-fire altcoin videos straight away. They're going to be live straight away by the time you're watching this video, with some extremely interesting opportunities. With Phantom, I outlined a really cool opportunity for a 200% pump. For ARB, I outlined some really, really important things with this coin that's just popping off right now. There are a lot of amazing opportunities that we're seeing in this market. I've outlined a 72% pump opportunity to play on Cardano as well. I'm going to continue to cover these content opportunities with you on this brand new channel. Check it out with literally just go in the description and you'll see the link to this channel is right here right at the top of the description. Go ahead and check it out and subscribe to it. The second chart that I want to show you is this beautiful Fibonacci retracement. This takes the market from our absolute top to our absolute low, and I want to make a quick note: it does not matter how you draw this. You can draw it from the top to the bottom like this, or from the bottom to the top, and it would make no difference. I've drawn it in the opposite way on this chart right here, just to show. Actually, I've drawn it in the same way on this chart right here, but you can draw it in the opposite way and it shows exactly the same picture. But on this chart, what we're looking at is the retracement up, right? The market fell, the market rallied all the way up here, and then we started retracing down. We've got this 618 Fibonacci retracement right here, which we managed to use as support quite nicely back in 2021. Look at this. Beginning of 2021, summer of 2021, this is the $30,000 level, and when we eventually got the big drop down back in 2022 as well, we found support here. This level has consistently been critical for the market, and now that we're back up to it, we are finding resistance at exactly this level. And it's weird, right? I mean, I drew it nearly perfectly, right? It doesn't really matter at this point how close to the very top or the very bottom you draw it, but what's weird is the 618 level is like exactly within a $200 accuracy of where Bitcoin has been topping out, like where Bitcoin has not been able to pump up higher. Let's take a look at this high real quick. The high right here, 29.2, okay, and the Fib retracement, 28.5, okay, so about $700 difference. Really no big deal at all. It's really not a particularly big price difference that we are getting consistent heavy Fibonacci resistance at. So this is something that I think could turn into a bigger problem for Bitcoin, and it is something that I'm going to continue to very keenly and closely monitor. If I start to see that there's something particularly actionable here that I can do in addition to my current Bitcoin trade, which VIPs have seen, I will be telling VIPs. And the only way to join is by following these steps on screen. If you do anything different, you will be speaking to impersonators who will steal your money and then block you. So please be very careful out there, because there are a lot of scammers out there, especially in these bear markets. But this is a really significant area of resistance, and I think it's why, one of the reasons why we're not seeing these whales step in. Whales don't want to step in at heavy areas of resistance, totally understandable. But also, if whales aren't stepping in and we're at heavy areas of resistance, we can't break it, right? We can't break these heavy areas of resistance if we don't have the support of the big players like whales. And unfortunately, that just seems to be what the current market dynamic is. And with that in mind, this thing might have to pull back a little bit to find some more strength, right? If we're consolidating here for now the third week, right? And this, this chart picture was taken today. We've got another day, and this weekly candle is over too. We're basically spending 3 weeks up here. To do that and really not have any particular development is concerning. Now, I think what we can do is we can look at, and there's one more chart I want to show you, but we can look at traditional finance to give us some, better ideas of what's going on. S&P 500 managed to get a strong correction off this level, exactly as predicted on this YouTube channel. If you were subscribed, you would have known that very well, that we were expecting that. We found support off this level, exactly as predicted. We found resistance at this level, exactly as predicted. But the prediction that I made here with you guys about the resistance level is that I don't expect it to be strong resistance this time. I told you guys that last time we saw a big drop, but I'm not expecting a big drop this time. I'm expecting that we recover this one fairly quickly. Why? Because we already got rejected here, so we don't need to pull off 2 strong rejections. The second rejection doesn't have to be very strong at all, and then we can continue to rise up. And that's what I think we're in. So if we start to see some more glory and sunshine for the S&P 500, I'm going to have to expect that optimism will spill over into Bitcoin. And if we get a breakout above this yellow box at 4170, I think it should be a really clean rise up another 100 points to 4270. That's the next area of resistance that I have on this chart, and it's a pretty good area of resistance. Look, you've got really strong support interactions here, consistent resistance interactions here as well. We're probably going to have a problem at this level, right? I mean, this is just an important level for the market. But once this level's broken, there's nothing that's stopping the S&P 500 from rising hundreds of points up, pretty much potentially to new all-time highs. And, it's a similar picture for gold. Gold's looking absolutely phenomenal. Yes, it is pulling back a little bit. So what? It's above $2,000, and it's the longest time that it's spent above $2,000 in a very long time. The last time gold came up here, it dropped back below $2,000 pretty much the very next day. The time before that, it only took a few days. This time, we are holding our price level. Not for a very, very long period of time, but we're holding it, and we're doing better than we've ever done before. Not only that, we've moved up in a much more sustainable way. Look at the way gold moved up previously. Big, explosive rallies upwards. It's price action that's just not sustainable for an asset that's as old and mature as gold. Next time around, same thing. It's basically exponential. This time, though, it is a strong rally, don't get me wrong, but we consolidated right before we broke out above $2,000. Did we ever do that before? No, we didn't. Over here, we had a little bit of consolidation, very short compared to what we have right now. The fact is, this is just healthier price action, guys. This is just healthier price action with gold right now. On the flip side, is the dollar looking healthy? I don't know. I don't think so. The dollar has mustered a small bounce. Nothing crazy, right? Only a small bounce. And it's still at the bottom of our support area. I'm expecting bounces, and if I'm seeing bounces that are small instead of bounces that are strong, that's telling me that even when the bulls are trying to fight and pick up more dollars, they cannot put enough of a fight forward to actually change the dynamic of what's going on in this market. And we know why. Saudi, Russia, China, many other major countries are moving away from the dollar for their oil trade, for other foreign trade. They're moving away from the dollar. So of course, we're gonna see the dollar continue to potentially get weaker. It's a weird dynamic because in the West, central banks have pledged to buy dollars, right? To support the dollar so that the whole economy in the West and the rest of the world doesn't collapse. But countries that are not traditionally in the West, we're in a situation where actually they're moving away from the dollar. So you've got a huge force trying to push the dollar up and a huge force that's going to result in the dollar dropping down. And the result is we are in the middle at a critical area of support. You and I are wondering what's going to happen just as much as really big players where, a small move in the dollar could really make a big difference to their massive hedge fund or whatever. This is a big deal, what we're seeing right now. We're seeing really, really interesting developments. And I'm not going to make a strong conclusion here. I maintain my current position. I think the dollar is going to continue to collapse. But, I don't want you guys to agree with me just for the sake of agreeing with me. My job here is to give you all the information and then let you make your own decision. So, the other chart, the final one that I want to show you is much more zoomed in. This is Bitcoin right here on the one-day chart, and you can see that ever since we started to top out and fail to break above 28K, our volume has been declining steeply, quickly. This is since the middle of March. We're now in we've just finished the first week of April. 3 weeks time, our volume has dropped off massively to almost nothing compared to when we first started to rally up into this area, which is normal. That's exactly what we expect when we're about to continue the trend. We stop seeing high amounts of volume when we consolidate, and then volume re-enters the market upon the breakout. But the fact is, because we've spent so long here now, everything is being thrown into question. If we've got a situation where we are trading at absolutely critical Fibonacci resistance, and whales don't even want to help, and we're seeing declining volume in a market that's just been flatlining for weeks, it's just one of those situations where it's tense and it's going to make people uncertain. I maintain my position. I've been saying this a million times. I'll say it a million and one times now. In these markets, it really pays to know what you're doing and stand behind your own judgment. Now, I've been in my long trade since 21,500. I've made nearly $200,000 in profit on it. Absolutely loving it. That doesn't weigh in on my decision. The fact is that the market has pulled off an amazingly impressive, bull run so far from the low to where we are right now. We've had very strong pullbacks like this and very strong consolidation periods like this. It still points toward upward price action for me. We've consolidated at resistance for a long time. We're forming the classic rising channel that Bitcoin does before it continues to move up. The probabilities are, in my opinion, still stacked in my favor. I must admit, I don't like this formidable resistance area at the 618 retracement. I don't like that whales aren't giving me extra confidence either. There are things that are weakening my argument. There are things that have weakened my argument previously, but the facts still stand. We're in a bull market right now. We're in a short-term bull market. Long-term, we're obviously still in a bear market, but short-term, we're in an uptrend right now. We've had a pullback. we've had a consolidation period. This is exactly what leads to further upside. Even if we pull back down to critical support areas, and we have a lot of them, daily time frame, look at our support. Huge support, exactly in the price levels we want to see it. 4-hour time frame, look at this. We're in the support right now. We're about to lose it actually because we've been doing nothing with it, but we're in the support right now. There's a lot that's still going in Bitcoin's favor right now. Daily EMA ribbon, none of these things have changed. They've only gotten better for Bitcoin. 4-hour Ichimoku, we're in it right now. Daily Ichimoku, it's exactly where we want to see it, at 25k. Daily EMA ribbon, exactly where we are right now. Everything that's still that supported Bitcoin previously still supports Bitcoin now. The difference is that the fear and greed index and sentiment across the space is clearly souring. People are looking around wondering what the fuck is going on, with fear, uncertainty, and doubt, and you best believe that's when Four Flies is going to enter the space, rip the market, and make some fucking gains in here. So if you want to watch the next videos I'm about to put out on the brand new second YouTube channel with a bunch of altcoin opportunities that I'm going to outline for you in exactly the same style as all of these videos, check out the second channel with that link down in the description down below. While you're there, get your free $30,000 in trading ammunition on Bybit by signing up using the link down below and making your first deposit and starting trading. That's it. That's all you need to do, and you will get that bonus free money that you can trade with. And if you want to join Four Flies VIP with 50% off, you can do that by following these links here. This link will take you into my free Telegram channel, and then you just click on my name and that's it. Or to directly go to me, you can also click on this link. There you go. I really hope you've enjoyed this video. You know exactly what to do, and I'll see you all on the second channel. Cheers.